Hey, what's up, guys? Sam here, and we're going to be doing the weekly review for the week ending in December 5th, 2025. So, another week is going to be in the books here in about 45 minutes or so, but I think the market is quiet enough that we can go ahead and dive into what we would normally do in these videos, which is to review the indexes, the sectors. We'll take a quick look at some volatility products and maybe a little bit of credit as well as we go into next week, which is going to be Powell. Everyone's excited about Powell. I know you have missed him. You have missed his purple tie and his handsome face. I know. I see the letters. So let's dive in. Towards the end of the video, I'll give you probably what I think is the best setup in the market. It's one that we talked about in last week's video, but I want to go back and update it because it only has improved, in my opinion. So let's dive in. So let's start here where we always start, which is going to be SPY, and a lot of improvement, certainly, from last week to this week, right? You had, well, frankly, not a ton of improvement from this week to last week, but mostly holding the improvement, I should say, from this kind of light volume Thanksgiving pump. And that's a good thing, right? That's a good thing. It's showing acceptance of price. We're set to close here above last week's high. So what will we have? We'll have a higher low. We'll have a higher high. We'll have a higher close, right? So these are three things that I would look for from a candlestick perspective to show price acceptance. And all of those things are in play. Last week, you got a couple of bull slingshot arrows right in the center of the range. Beautiful, best signal possible. If you want to see what that signal is capable of, the last time that you had one was right over here on the left-hand side of the chart. Down there, basically, not quite at the lows, but right about here. And bull slingshot is one of my favorite signals because from there, you can just launch, and you can see the effect here as well. From there, you just launch. So going into next week, of course, you got Powell on deck, and the question is going to be whether he facilitates the new highs or not. And my bias, I'll go ahead and kind of tip my hand here to you. My bias is actually that he will. I don't have any particular structural or technical reason to believe that he won't. So as we go through the video, let's see if we can find any problems. For now, on the weekly chart, like we talked about, you have the higher high, the higher low, and the higher close. Those are all important. The weekly chart never changed. It's been max bull even during all of this kind of pull down, so that was all good. And then, of course, now on the daily chart, you have neutral up, but it's really fighting to go back into bull very quickly. So, of course, I would not want to necessarily fight the signals quite just yet, and as I say that, it's flipping back and forth between bullish and neutral up. So it's right on the cusp of trying to do the thing. Let's go to the QQQ next. And although I expect to see more of the same here, towards the actually after. Yeah, after this one, we'll go back to the SPY because I want to show you what I believe is kind of the prize that's worth fighting for. So there is a bigger structure at play here on the indexes that I think you need to be aware of. It's the biggest squeezes that I see on the indexes, and so we'll go back to SPY here and check those out. For now here on the Qs, pretty much identical situation, slightly weaker. It's not quite as strong on either front because the SPY has not had a down arrow, whereas this one got a down arrow basically right here, and it hasn't yet recovered. But at the same time, it's not just as simple as like, oh, there's an arrow that breaks it. You have to factor it all in, and fortunately the score does that for us. So the arrows here, all they really did was just knock it from max bull, which is dark green, to light green, which is still bullish. And there's really not much to see there. It's a good chart. Daily chart, same thing. Not quite as strong as SPY. I believe SPY was like a 70 flicking onto an 80, but still very serviceable here on the NASDAQ. So I don't see any issues there. Let's go back to the SPY. I want to show you kind of what I believe is the prize that's worth fighting for here going into next week. And that's going to be the biggest squeeze that I see, which is the 2-day and the 3-day. So let's take a look at those two, because there's no squeezes on the daily chart that I saw. So here's the 2-day chart of SPY. And you can see the same dynamics here as well. You know, it's max bull. A little bit of a funky looking squeeze histogram here, admittedly. All right, you see how it kind of, it looks good, but you see how it had that weird like fire, and then today kind of goes back into a squeeze. A little funky, but overall it's in a squeeze and it's max bull. Cannot look at that any other way other than bullish from a probabilistic point of view. If we look at the 3-day chart, which also has a squeeze, then this one is just kind of unapologetically bullish, right? It's another max bull squeeze. You have the upward bias to the squeeze histogram, which again colors my thought process pretty heavily. So these are the squeezes worth fighting for, I believe, going into next week. And essentially, if they fire, and they will at some point, then that would take the market basically into the end of the year. So is it just going to be so simple as Powell blesses the market and then it takes off? Probably not. I could see a situation in which we kind of have to pull back next week, maybe early next week, maybe on Powell or the day after Powell. But I would be looking to buy a pullback. I would be very surprised if Powell was the reason that this thing broke in any actual meaningful way. So we were long in the room from yesterday. We got out today very close to the highs. I thought that was a great exit. We have not gotten those prices again all day, so that was a good exit. And then I'm going to be looking to get long in the room next week as well. And I'll probably end up doing something like the December 19th expiration out of the money debit spread, maybe, or in the money credit spread, or something like a broken wing butterfly. Honestly, if you kind of get what I'm saying, none of it really matters. As long as the setup plays out, you can kind of just close your eyes and throw a dart, and it should work. Of course, that will be dependent on the setup playing out. Let's go to the IWM next. So the IWM has been on a tear. It's been absolutely terrorizing shorts, and that's what the IWM does best, is nothing, 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 and then it destroys anyone who doubted it. So with the IWM here, I'll just ruin the surprise. You can see the scores for yourself. It is the strongest of the bunch for now. It does have the bull score on the daily chart. Very strong, very strong. Closing above last week's high, higher low, higher close, all that stuff. There's a 3-day squeeze here on the IWM, so that one is going to be worth keeping an eye on, and very proper looking 3-day squeeze as well. So this kind of starts to set up the bigger stuff on IWM. What will be wild, and I don't think I've ever shown a quarterly squeeze on this channel before, but just in case, how about that one on IWM? So if this squeeze fires long, and there's almost no reason to doubt it, and the only reason that I even kind of maybe sound slightly skeptical about it is just because if this fires long, it usually implies about 2 years worth of rally, which I don't believe. But I have to show it to you just because it's so impressive. And the target on this would be about 267, and then above that would be about 296 on the IWM breakout potential there. So we do have to check our biases in trading, and I certainly have a bias against the IWM. I just think it's a silly index full of bankrupt companies that make no money. But at the end of the day, a chart that is this liquid is tradable. Let's move forward to the credit markets, and as always, we'll look at it through HYG. I don't get a ton of information from looking at the interest rate. Again, I talk about this all the time, and I would highly suggest that you investigate this and apply it to your trading. But if you were to tell me that interest rates go down next week, could I tell you that the stock market's up or down? No. If you were to tell me interest rates were to go up next week, could I tell you whether the stock market's up or down? No. We saw interest rates go up a decent chunk over the last week or so. And the IWM, which is the most interest rate sensitive sector or index, went straight up, right? So essentially, Superman, let's say in this case IWM is Superman, which is laughable, but let's go with it. IWM Superman goes into a room. The room is full of kryptonite. In this case, kryptonite is higher interest rates, sharply rising interest rates. And instead of hurting Superman, it actually makes him stronger. So in that case, at that point, Superman's pretty much invulnerable. His one vulnerability is a green rock, in this case, higher interest rates, and it doesn't affect him anymore. So very strong stuff. But with that said, I segued there because if I just look at the TNX, which is the 10-year interest rate, it doesn't help me make any decisions, right? If you were to tell me interest rates go up or down, I couldn't tell you what to do next. However, if you were to tell me that HYG is going to be strongly green next week, which I would probably suspect that it will be, but if you were to tell me HYG were to be strongly green next week, buying the index, buying the SPY, buying the SPX becomes kind of a layup. So I get a lot more information, a lot more actionable information for risk assets by looking at this stuff as opposed to TNX, for example. So here on HYG, again, mediocre chart. You can see it's going gray across the board. It leans bullish because the scores aren't negative. The structures are green, although the overall score is neutral, but the structure is green. So this is the Bulls' game to lose. It's not as strong. It doesn't favor them strongly, but if you kind of put it all in perspective, interest rates went sharply up. TLT, got hit pretty hard, and this is just cruising. So this is still cited towards the bulls, which is good for risk assets. Let's jump over to the VIX. So the VIX signal that I had pointed out over the last couple of videos has really changed. And when the VIX signal changes, we have to change. Right? We don't want to be stubborn in our point of view of things because as traders, that's just going to cost you money, right? So you have to be able to have an agile mind and shift your perspective. So let's actually start here. This is the weekly notes that I share with the folks in the Mastering the Trade Room. I try to do this and share it every Monday when I see appropriate. Sometimes I just go with what I see, but oftentimes if the markets are more complex, I do decide to do this. So let's maybe start with the game plan here. So the game plan is what now? This is written on December. This was actually written on Saturday, so whatever day in November the last Saturday of November was. But it was dated for the beginning of this week, which is December 1st. So the game plan is what now? And the game plan had been to allow for a large bounce into resistance, which was last week. Check. Get a sell signal against resistance. I should say resistance, not support. Get a sell signal against resistance and then short it into next week. That was my plan. The problem is I never once from last week or this week have gotten a sell signal to justify shorting. So what do we do with that? Do I stay stubborn? Do I say, well, I'm right and the market's wrong and I'm going to continue to, put this nail into the wood with my face? Probably not. So we shift. So however, the signals have shifted enough for me to shell that idea for now. I'm happy to follow back with it, but the breadth thrust, which we've talked about, massive, mostly seen in the IWM, breadth thrust, monthly candle says, we looked at that last week, massive, amazing candle closes on the monthly charts, saved in the last week, remarkable. And multiple bull slingshots and squeezes, which I showed you earlier in this video on the SPY and the Qs and the IWM, and the squeezes, 3-day and 2-day, that were created last week is enough for me to see the market as balanced with a bullish bias. It is a slight bias, and I would actually say it's grown. It's less than slight now. It is a definitive bias / edge now, but I must factor that in when day trading. For now, the best edge is to focus on the hourly charts and then use the smaller term charts to guide the way. and so that was the game plan there. This was the watch list of stuff. I called out XLE this week. Not a bad little pick. My one spec was app. You can go back and see how that one did. That was all that good stuff. This is the scores. That's the earnings, and that's our seasonality. So at some point, if it follows seasonal practice, will we get kind of a little bit of a dip in December and then close the year strong? That would kind of hit all the notes. And why not maybe happen next week at some point? I would be looking to buy that and then rally it into the end of the year. So I think right now probably the best thing, the most bullish thing that could happen right now is actually a pullback, and actually like a swift one, like a day where folks think everything is broken, maybe after Fed, maybe before Fed. I'm not entirely sure, to be honest. Nor do I have to be. It doesn't matter. But I will be looking to buy if there is a swift pullback, ideally of decent magnitude. Then I would be looking to buy that. So let's go back here to the VIX signal. So the VIX signal that I had been pointing out was this, that the VIX histogram, which can be applied to anything, was rising back here. And then, of course, you got I think that was the tariff tantrum stuff that pushed it to 60. You had a similar effect here where the squeeze histogram was starting to climb, but last week and then followed by this week has completely nuked it, right? Not only did it nuke it nuked it basically below 16 where it started. Now, down here below 16 is a little bit, that's just, they took all the juice out of the market here, right? And so now the signal is no longer the same, because back here the signal was climbing up. Here it was climbing up, and before it did anything, it actually dipped back lower, right? So the signal did shift. One thing that I did miss, and I do have to point this out, is that back here there was a high-low thrust signal right before it took off, right there. And here, unlike last time, although the squeeze histogram was similar, you never had thrust at the lower end to justify that. So the VIX here has been hit ridiculously hard from 28 to 15 in a straight line down, and getting it to go up a little bit with a little bit of fear would actually go a long way, in my opinion, in terms of setting up the rally. And here on the VVIX, kind of the same thing. Yeah, kind of the same thing here on the VVIX, which is the VIX of the VIX. So we covered pretty much everything. I do want to kind of re-emphasize here what the point of the video is, which is going to be the 3-day and the 2-day squeezes on SPY. So we already looked at those, and I think that's really the prize, like I said earlier, the prize it's worth fighting for. And this is the perfect way to end the year, right? If folks are expecting a rally, it would be more poetic and a little bit better, frankly, if there was a good flush before the rally, like just a 1-day flush, like maybe 90 points. Is that asking a lot? 90 points in SPX, and then that would set up a very nice rally into the end of the year. But I'll go ahead and leave you with this chart, which is the SPY 3-day. I don't want you to forget about it. This is the prize worth fighting for. And if you kind of get what I'm putting down, normally I would drop some stock picks on you. And if I had to drop some, banks look great here, specifically things like Citigroup, Morgan Stanley. All the banks in general have a lot of multi-day squeezes. But here's what I would do if I was you, because I'm not going to drop any scans on you or picks on you, because I'm not really looking to play it that way myself. Actually, no, I owe you one. Sorry. Let me finish this thought, and then I'll give you the one that I promised you, because I do owe you one. So here's what I'm going to do. I'm understanding that SPY has the best setup that I see in the market, right? With that 3-day squeeze that's right in front of you there on the left-hand side. Because of that, I'm just going to be looking to play SPX into the end of the year, and I'm more comfortable levering it up. So could I go into things like APP, and kind of catch these big moves, or could I look at things like AUKLO, nuclear energy, quantum? Sure, of course. Could I go into AVGO, which I probably will, and catch a bigger move? Sure. But really what I want is consistent and aligned setups, right? And when I'm long SPY or SPX, I sleep like a baby, right? Because I don't have to be right on a specific stock. I don't want to wake up and the market's rallying and I'm in Netflix and it's getting drilled, right? Or I don't want to wake up and the market's rallying and I'm in something that isn't rallying. So I avoid that by just saying, okay, well, most of my signals are coming from this SPY 3-day chart, which is on the left-hand side. Why don't I just play that? Now, if you are the type that will prefer to find the diamond in the rough, then just look for 3-day, 2-day squeezes and try to find something that looks as good, if not better, than SPY, right? And then I think that's a completely reasonable way to do things. So I did say that I owed you one good pick, and I will bring it your way here. Before I do, I'm going to do my usual thing and ask you to drop us a like and a comment on the video before I give you the pick. If you don't know what to comment, you don't have any questions, just let us know what your pet's name is or what you're having for dinner. My dinner is going to consist of a double entree of air because I'm doing a fast. So, not very exciting, but if I was commenting, that's what I would say. So drop us a like, drop us a comment, drop us a like, drop us a comment. It does help us out a lot. The pick into the end of the year is going to be Tesla. And not the easiest chart necessarily. If you look at SPY, much just gentle, clean trend. Tesla, not quite. It had this little bit of like this frisky moment there where it broke below 415. But we've been covering this one in the videos pretty much for the last like 3 videos. And so this is going to be the 2-day chart on Tesla. This 415 level, 414.5 to be specific, was the previous high, the previous all-time high before it had a huge crash to about 100. So we remember that because the market has a memory. And after it flushed here below 414.5, the fact that it was unable to stay below there and went back above is a critical part of this analysis, right? Essentially, this was a false breakdown. It becomes a bear trap, right? So anyone who shorted on that break is now trapped. Anyone who got stopped out on that break is now trapped, meaning that they want to buy more. And from this perspective of the squeeze, it's a perfect high compression squeeze, meaning that high compression squeezes like to go in uptrend, break counter trend hard, and then if they're any good, they actually will then spike and go in the direction that they were intended to go in the first place. And that's kind of what I'm seeing here, right? Like you have an uptrend, you pull back, the squeeze histogram threatens to fire short, never fires, and is now rounding back out to the upside. And you have my favorite signal, which is going to be bull slingshot down here, created right here on this candle, right? So essentially you have a slingshot squeeze, meaning that it went red, goes back into yellow, and then threatens to break through the upside, which is very bullish. You have a max bull chart, and you have bull slingshot here. So, and you don't even need this at this point, but you have this kind of sucker's break on the lows. And so this is the setup on Tesla that I think should take you into the upper target, which is going to be 488, and then roughly 500, potentially even by the end of the year. If not by the end of the year, by January. So in terms of, for those folks that like that extra kick, that extra sauce, if you rolled your eyes when I said I'm going to be playing SPX and you think that's too boring, now mind you, you can always lever up. SPX can handle, it can handle anything you can throw at it, which is good because I'm going to throw a lot. Then Tesla would be my pick here. I'll give an honorary mention to Avgo as well. I think that they have earnings coming up maybe next week, and I think they're going to do well. So choose your own adventure, but I'll put my stamp of approval here on Tesla to close the video. All right, beautiful people, thank you as always. Drop us a like, drop us a comment. Thanks as always for checking us out, and I'll see you in the next video. Cheers.